Let's see other stories making headlines in Africa. Egypt has reached a preliminary agreement with the International Monetary Fund, bringing the country closer to completing two important program reviews. And this deal paves the way for the release of more funds for an $8 billion loan package. Now, under the staff-level agreement, Egypt could receive two tranches totaling $2.5 billion from its extended fund facility, and the deal still requires final approval from the IMF's executive board in Washington before the funds can be accessed. Now let's move on to markets now. Equities. I see how Nigeria's equities and other major stocks in Africa are performing at intraday. We see Nigeria's NGX in the green, 0.34%. That's a huge one at intraday, rising to 152,973 points. Not so far from 153,000 here. And we have the GSA in South Africa also up 0.56%. At 116,562. Let's see how Egypt's EGX performed at intraday. Also in the green, 0.29%, 41,222 points. And we have Kenya performing not badly for Monday's close. We'll see how they perform at the close of business today at 184,000.78. 184.78%. I'm going ahead of myself there. And let's look at what's happening in Nigeria's FX space, because a lot has been happening. We see it dwindling, dropping from that 25-week, growth road that we saw. But Chuka Nwachukwu, Chief Dealer and Group Head of Trading, is joining us to discuss that. Chuka, good afternoon. It's good to have you join us.
Good afternoon, you.
Chuka, it's Christmas, and a lot of people, we have this Dirty December thing coming in Nigeria. We're happening in Nigeria a lot. But dollar inflows in the reserves seem to be dwindling, especially now that we need that kind of stability. What's driving this downtrend by $263 million after that 25 weeks of growth that we saw? And what does this mean for Naira's stability?
Okay, thank you very much. The dollar, the Naira hasn't done really badly. Our reserve grew from January to date about 11%, and so we've just seen a slight drop of 0.25%. So basically, what has driven down this reserve, obviously actually had to do with activities of some FPIs. This is year end, and then a lot of investors are winding down, taking profit, and then to reinvest again after the new year. And so the activity is what has hurt the reserve slightly, not really necessarily the Dirty December. If for anything, the Dirty December actually brought in quite a number of inflows, especially using the IMTOs. You could see that there's a growth at that end. So we, in the past 1 or 2 months, we've seen OMO maturity over 2.2 trillion, leaving the markets. So that obviously is where the issue is.
Okay.
FPIs is hitting their position, their tenured maturities, and that's what actually is hurting the FX market. But again, CBN has also been intervening, and then of course making sure that the stability is maintained. So I really don't think there's much to worry about.
Okay, especially now, it's still at $45 billion. We're still keeping our fingers crossed that we will not go below that level. But how is the Naira currently performing against the dollar across official and the parallel markets? I'm sure our audience want to know, especially with spending power. They want to know how much they can spend.
So Naira is currently trading between 1,480 to 1,646 levels. As of yesterday, it traded around. It was the high of about 1,465, and then of course CBN intervened, and that's pushed it down to around the 1,045 levels. And so it's been trading within that range, and that's why I said that there isn't much to worry about, because CBN actually has been intervening heavily, and just to downs the demand and then the depreciation. So Naira hasn't it's been mixed anyway, but there isn't so much to panic about. And I think the stability, will continue within now and then end of the year. However, going into the new year, we probably might see some form of depreciation, especially as government try to fund these activities for the new year.
Okay, but is there any gap between the official price for the exchange rates for the Naira and the parallel market as it is now, as it stands now? And do you see any future diversion, maybe getting wider or maybe closing in?
The gap isn't much. Don't forget that one of the greatest achievements of this administration is the fact that they've been able to, bring the difference between the para market and the official market, to next to zero. In fact, sometimes the official para market is sometimes even more cheaper than the the official market. So the gap is just around maybe between 1 Naira to 2 Naira, depending on who you're buying from. Don't forget, is a willing seller, willing buyer market, is also a free market. So depending on who you're buying from, most traders different traders have different rates depending on how the level at which they source the fund. So there hasn't been really much different, and so we can also say that stability for now is assured, at least for the next 1 month or 2 months.
So we're ruling out speculation. Is that what you're saying? No more speculation on the Naira.
Well, no. I don't think because speculation does not help the market, and I think that's one of the major problems we've had, and that's why the CBN governor, when he came in, obviously, tried to, to remove that speculative side of the market, because you see what speculation does is that it gives a false impression that things are going to happen, which isn't, and so you see people holding FX, and that's it's not the proper thing to do. So for me, I think that the further guidance is that the market will continue to be this stable, and that's what CBN has demonstrated by constantly intervening in the market. So speculation don't help the economy, and then of course the foreign investors will not obviously have the confidence to come in. But now there's confidence because there's no speculation, and so the Naira will continue probably to continue to be stable and
fantastic. Fantastic. So how would you summarize the fixed income market performance looking over the last 11 months, and what's your outlook for 2026?
Well, the fixed income market has done extremely well. We've seen yields from January move between from 24% on the TBU side, and even as high as 28% on the OMO side, to 15%. And so you could see that towards the end of this year, so last quarter actually. So you imagine someone who bought security at 15, even if it's 20%, and is currently trading around 15 levels, 17 levels. That's almost 500 basis points. So the fixed income market has been very, very stable. It's also been a market where the most investors have made a queue this year, if I might use that word. Now, looking into the new year, I think my projection is that the market, the yield we continue to elevate. It has started going up. The reason being that there are factors that will affect yield elevation. One is that next year is the election year. Government obviously need to fund a lot of activities, and then of course, secondly, government obviously also moved some of the deficit, the budget deficit for 2025 into 2026. So what it means is that they still have to borrow more, and so when you're trying to for government to borrow more and to attract local and foreign investors, they have got to make the yield attractive. So my expectation throughout next year, between the first and second quarter of next year, is that we still experience elevated yield. We might see NTB printing around the 21, 22 levels, and then OMO probably much higher. On the bond side, bond has been a bit quiet. We've seen moderate. The yield hasn't moved that much, and that is because the introduction of 10% tax on the fixed income, on the T-bill side, is obviously making most of the investors run to the bond side, especially the FGM bond, which is tax exempted. So we've seen yields, over between 16, 17% for around for the longer end of the curve, which is the mid and the longer end of the curve, 2033 to 2053. So bond has been a bit stable, and then going into the new year, we expect moderate increase in the yield, but then I don't think that bond yield will go beyond 19%.
Yeah. Oh, thank you so much, Chuka and Nwachukwu. So we just look forward to better yields, and more money in 2026. Chuka and Nwachukwu, Chief Dealer and Group Head of Trading at UBA. Thank you so much for joining us on Business Incorporated.
Thank you. Thank you.